let's go ahead with your story. So introduce yourself and give us the story.
Sure, Brad. Great. Thanks so much for having me. It's great to be with you. This is our second conversation and first sort of on air kind of conversation, and so love the chance to chat with you. But one of the things that you wanted me to do is share a little bit about the background about T-Spy and where it came from. And so maybe I'll start at the beginning. I came from a totally different world. Computer engineer, ended up working at a tech startup in Silicon Valley, doing embedded systems coding. So super nerdy, super low level, but I just love building things. And we ended up getting acquired by Cisco Systems back in the early 2000s. I loved the startup environment. And so when I went to Cisco, I realized big company living wasn't really my where I could thrive the most. So I was lucky enough back in 2005 to have a little bit of a buffer to then think about what I wanted to do on my own. And I actually founded my very first technology company back in '05. Different world, construction tech startup, but the common thread has always been, how do you take innovation and disrupt kind of established industries? That was construction and construction technology. This is finance and fintech. So I ended up running that company for 17 years, grew it to 65 people, and it was an amazing experience. But 17 years passed, and I blinked my eyes, and I was like, wow, half my career is behind me. And if I want to do anything else with my life for the back half of my career, I've got to think about making a shift. So in October of 2022, I ended up leaving the company. It's still running, and fingers crossed we'll get to an exit soon. But I ended up leaving to figure out what the next adventure was going to be. And I don't know if you remember in October of 22, but the markets were way down.
Yes.
And one of the challenges was, hey, how do I make ends meet for the family? And it just so happened, timing being what it was, 4 months from the day that I left the company, my wife and I were expecting our first baby girl. And so the financial pressure was on. All right, great, you want to do something different with your career, but how are you going to make ends meet? And I didn't want to sell my SPY shares, which I'd been buy and hold forever. So I remembered a strategy my dad had taught me. And he was like, you can actually use those shares to generate income for yourself using a strategy called covered calls. And the perfect storm that happened right at that time was zero DTE covered calls just became available on the S&P 500 that month. So I'm like, all right, well, let me try this and see if it amounts to anything. Fast forward a couple months, and it absolutely astonished me. Just the options premium from doing daily covered calls on my SPY shares covered the lion's share of our mortgage. And that financial relief for us, for our family, right before our baby girl was going to be born, was such a blessing for us. And, if I was working full time, I couldn't have done it because it takes a ton of work. I did a lot of math before I decided what positions to take. So with my software background, I wrote cloud-based software tools to help me do it. So it took 3 to 4 hours of work down to under 5 minutes a day. And that was, I think, the aha moment where I'm like, I'm looking for the next work adventure. This is it, right? Talk about necessity being the mother of all invention. And so I was trying to figure out, all right, I've got this technology, it's adding value to us. The financial relief that it provided us and that feeling, like the fact that I could be there for my baby girl's birth, and the fact that I could be there and not miss a thing for her first year. I was so grateful for it. And I just wanted to find a way to share it with other families like ours. So we had a choice, um, try and build a business around the technology. So we did a lot of research to say, hey, do you want to try and license the fintech out so that advisors and individual investors can use it, connect their brokerage accounts to it, and have it run the same algorithm on it? Or I ended up meeting some folks that have been in the finance industry for a while, and they shared, the idea of ETFs and issuing ETFs. And I'd never considered it, but I ended up learning a lot from a group out of on the East Coast, Tuttle Capital Management, and they're actually our trading sub-advisor. But they kind of took me under their wing, and they're like, we can help you get this to market, but this idea of taking the value that's created by this strategy and your financial technology and wrapping it in an ETF, and then you can deliver it to everybody directly to their brokerage account versus any other way. And for me, the whole purpose of kind of founding Tappalpha as a business is, how do we provide access to powerful financial tools for everyday investors and advisors. And ETFs are such a democratizing tool because you can take any strategy, wrap it in the ETF wrapper, and anybody can participate in it if you have $25 versus if you're a hedge fund, there's a access limit to play that game. And so I love that idea of democratizing powerful financial strategies using ETFs. And then the second piece was access through technology and innovation. You put those two ideas together, and that created the idea for Tap Alpha. And so it was a journey to get the first sort of fund to market. Part of it because it was zero DTE. Some of the established banks and players, it was difficult for them to implement the fund. And so we fought really hard to get, what you and I had talked about before, which was an implementation of the strategy that owned shares, because that's hard when shares are at a custodian and then you're actually trading options against them at a prime broker. The communication back and forth is hard. So we had to make a horse change for the banks, et cetera, et cetera. But we finally got it to market. I'm really proud of the implementation that we got to. So finally, August 15th of this year, 3 months ago, we launched our very first ETF, and that's T-Spy, doing this zero DTE options covered call strategy on the S&P 500. And the other thing that was sort of a kind of a perfect timing and a way to honor my dad is August 15th was his birthday. And he's the one that taught me everything I know about options and trading.
So does your daughter know that you send emails while she's at rehearsals now?
Yeah, it's so funny
Just gonna
because
call you out on that one.
I love it. No, she's, and I was sending emails before because I took her and we did the class together, and it was just, it's one of those things where I have the flexibility to be with her now because of this, and so I'm just really grateful for it and want to share it with others. But to your point, I know exactly how old the company is because it's my daughter was born February 24th, and we launched the company on February 3rd of that same year. So the company's 20 months, just like my daughter is. Um, and I remember when we actually went to New York to do the bell ringing ceremony at the NASDAQ for T-Spy's launch, and they put up your logo in the middle of Times Square, and I'm just sitting there looking up, and I got emotional about it because that logo for Tap Alpha was done when my daughter was a couple months old. She was awake at night. I was feeding her, and I went to my wife's office and we designed the logo together at 3 a.m. And to see it in the middle of Times Square was such just a full circle moment for me. And I'm just so grateful to have had the opportunity to sort of join this industry over the last couple of years.
So you talked about your computer software builds an algorithm,
Mm-hmm.
right? And that algorithm, it doesn't make the calls for you. It just gives you the guardrails. Am I correct on that?
Yeah, it
That-
takes in, there's just so much data in the market that can help you make informed decisions, and it's too much quickly for me or any human really to process. So it takes in these data inputs in real time, and then it just puts it in front of me in a very simple way that me as a human can understand it. Hey, here's your risk, here's your reward. Where are you comfortable? And here's the menu. And it clears out all the numbers and all, and it just gives me a very simple choice so that I, as a portfolio manager, can clearly see it and make the call every morning, push the button, set the position. And then throughout the day, the other thing that's really unique about it is it has a real-time dashboard that takes in that data, and it has sort of alarm sets that show you, hey, this is in good shape, or we're approaching something that you might need to take an action. It does that all in real time, and it's something that technology can do that's really hard for people to do on their own.
Sure. Because I watched the other day, because one thing that you do is you'll close out early, depending on market conditions. But
Exactly.
I watched the other day, it went through your strike and you didn't do anything. And then it came back down through the strike. And I'm sitting there going, I wonder what he's looking at to make that decision, because I would have thought he would have closed it out.
Yep, and that data really helps us understand the context within which those things happen. And it's really interesting because when something goes through a strike price, it's called a touch. Touches happen so often, but actually closing in the money happens, you know, less often when it comes down to it. And so you can actually make a decision based on where you want to close out your positions on that. And so to your point, we'll close out early. Like if the day is 2 hours in, and we've already collected 98% of our premiums, we'll close it out and say, let's lock it in. Let's not continue the risk. And in some cases, we have the ability to go back and set a new position. So, for example, if something goes through our strike and we don't necessarily want to close out for the loss, we can actually buy more time and do a roll to the next day where I usually do buy an extra day and then I'll go up so I create more headroom, and that allows me not to
Yeah.
necessarily have to take the loss
Do
day
a,
off.
a diagonal roll
Exactly.
when you do that. So that
Yep.
gives you more time. And does your algorithm, your software bring in the data to tell you what your risk level is by doing that?
Yep, exactly. So you kind of know based on a full data set to understand, right? If I take this based on the calendared events like market conditions, if Jay Powell is speaking the next day, I'm not going to roll. It's just too much, too many variables. Versus if it's there's no macro news, there's no calendared events, there's no big earnings. Like today, Nvidia is going to release
NVIDIA,
their earnings,
right?
right? So after market close. So those are all things that go into making the decision so that we can really create a dynamic execution of this covered call strategy. And I think that's what's showing in our total performance, total returns, because we take all this into consideration and we have flexibility to make moves during the day where I see others kind of are more set it and forget it. They have a position and that's it for the day.
Yeah, because I noticed that your NAV is like right on top of SPY, like real close to actual what the SPY is. And for me as an investor, if I'm taking my portion out, and I think we've talked about this, I live off of 8%.
Mm,
All right. So I'm taking my 8% and you're tracking the market. I'm great. It's when you're not tracking the market and you're farther below on your NAV, then becomes the conversation what happens when there's a market turn. Because
exactly.
I know, at least I'm hoping, and tell me if I'm wrong, I'm hoping if the market does come down, that you'll still be above or at SPY. And when SPY recovers, because SPY will always go up and to the right over time, that yours will go up and to the right at the same similar pace.
And that's, we have to say we have no crystal ball, but the design of this algorithm and covered calls done
Sure.
daily is exactly that. When markets go down, you actually have some option premium to fill in the hole that's there. When markets go up, the trick is how do you not get capped out so the market doesn't outrun you? And that's where zero DTE actually is the best tool that's out there right now. And it's a new one. And that's why potentially you see over time the performance that you're seeing from these zero DTE funds.
Did you say, or did I hear this, that for zero DTE, it gives you 4.5 times the premium than a longer dated call?
I was shocked when I wrote some software to get me the data. And what it did is it compared a 30-day option position at the same delta, which is one measure of risk, to doing that same delta every day over that period of time with zero DTE. And you add up the premiums, you compare them for the same risk level. It's 4 to 4.5x the premiums that you can collect from zero DTE. That's why it was really just a better risk adjusted return model for the time being. Who knows what the prices will do in the future, but there's such a high demand for zero DTE. We're seeing these fantastic premiums for the same risk. So why would I want a 30-day when I can actually get paid more for the same risk level with a 0 day?
Good to know. Let's talk about risk of tap alpha. How many people are in your team? Is it
Yeah, good
just
question.
you?
No,
If
there's
you
two.
go,
There's so we have a full team kind of outside of the business. So we have trading sub advisors, we've got our custodians, we've got all the accounting teams. All of those ETF functions are there. So there's probably 30 people all in all. But my whole um, business building strategy has been outsource expertise that isn't core to it and keep in-house the core. So there's two of us internally that are Tap Alpha W2 employees, and then we have a team of about 30 externally. And so I manage the portfolio management. I'm running the algorithm and actually managing the portfolio. And then we've got another team member who helps us with all the compliance work, operations, execution, things like that. So it's been a really good balance. And then as we continue to grow the business, we'll probably invest in some, additional resources to help us grow more funds, more portfolio managers. But right now, my goal is just to take this idea, launch it, and prove it with T-Spy, build a track record that shows this works, and then we can scale out the business from there. But this is like a really exciting time because we just got our first 3 month performance window, and we're going to keep pushing on forward. But the numbers have been fantastic so far, and the AUM is sort of reflecting that growth, which I'm super excited about.
So, and I think we did talk about your outsourcing, and that makes sense that like legal and all that's outsourced. I mean, I worked for a big company and our legal, we had internal lawyers, but most of it was outsourced.
Yep.
All right. So that makes sense. And custodian, I don't want you holding my funds. I can
Yeah,
understand.
exactly. Leave
I
it
can
there.
I can understand that.
Yeah, custodians
So
there, and then all the kind of the compliance infrastructure and like the trust and all that you need to have to actually operate an ETF. That's all outsourced as well with some great partners. So we found some good folks that are helping us bring this to market.
so I'm going to ask you about TDAC.
TDAC, yes.
Yeah,
So TDAC is this.
I went and read the prospectus, so I know that it's out there.
Yeah. So we are SEC effective with it. My vision for timing on that is basically getting T-Spy up, proving the model, getting through the end of the year, getting assets up so that we have this viable idea. And as soon as we can validate that in the market, so the more your viewers like it, please tell me, then we can stamp out TDAC, which will be the exact same strategy using the same software, taking dynamic data points and running zero DTE on the NASDAQ 100. And we also can do T-Rus, which will be the same thing for the Russell, but we need to prove T-Spy first.
Yeah, and the Russell should be. I've been looking at like the VIX and then the other indicators for the different funds, and it's clear that on the Qs it's higher than SPY, all
Mm-hmm.
right, but not as high as the Russell.
Yep.
Does your software is it the same algorithm or does it take in different data points for the Qs?
It takes in different dynamic data sets for the cues because those indicators will all have different values. And then it basically boils it down to the same choice, risk reward, but it takes in the cues data. And then you can actually take the higher volatility and you can do one of two things. You can take the higher premiums and keep a similar delta between the strike and your position, or you can actually create more headroom with that higher volatility, take a similar premium, but have much more headroom to sort of account for the movement that the cues have versus the SPY. So it's really dynamic in the way it can actually handle data. And that's what makes it really scalable because you can plug in almost any security, it'll do its thing and then give you that choice. And you can make your choice based on your risk comfort level.
But hey, so since this is out there, how do you feel the zero DTE market is at the current time? Do you have any
Hot,
insight to the zero DTE marketplace?
very hot. It's a very hot topic. I forget what the actual current day stat is, but there's a huge percentage of daily options or of options that are traded every day that are actually the 0 day options. And so you're seeing this advantage happen where people look, there's a ton of demand for it. And that's also what helps create the premiums and the opportunities to get that 4 to 4.5 times. So I think 0 DTE is going to be a growing industry. And there's two things. I went to New York last week for an ETP, like an exchange traded products conference, and options were one of the top topics, and ETF growth. And you're seeing all those things go up and to the right. And so I feel like we're at the right place at the right time with the right idea. And so if and when we can prove this over 6 months, a year, I think it's a lot of upside and opportunity. But zero DTE is a hot topic, and SIBO, the Chicago Exchange,
Yep.
is talking about bringing zero DTE option products even to single stocks and other equities. So keep an
I
eye
heard
out for
that.
growth in the
Yeah,
space. Yep.
I heard about that one already, and I actually heard what stocks it was, and I just shook my head. I'm like, yeah, nice, nice job, guys.
Yeah, exactly.
Yeah, pick the volatile stocks, right? Nothing.
They want the big premiums, so you got to pick volatility.
So, anything else that you want to share?
I I really love the feedback loop. So like kind of being able to get in, seeing the comments that your viewers have and the input. It's helped actually shape our perspective. One of the things that we started with, we were going to be a lower yielding fund because I just wanted to, focus on growth more than anything. And then you distribute what you have to with the options premium. But what I learned in the industry, especially now, the early adopters of these funds are really looking for income solutions. And so we ended up changing our distribution rate from, 6 to 7%, which was our original target. And we increased it now to 13 to 14% in order to sort of meet that market demand. So we're listening. We love the feedback of the input. We want to understand what problems that funds like this solve for people in the marketplace. So keep that feedback coming because it's really helpful for us. We want to make something useful to the world. And the only way to know if we're hitting the mark is to hear from everybody on how things are going. So
So
appreciate that.
I'll just go ahead and throw it out. How about weekly?
That's another question that we're listening for. So we've gotten a fair amount of input for weeklies. And now my debate is, do we take T-Spy, which is it's actually one of the only growth plus income funds, right? You think about XDTE, they're pure income. You see the growth is, like you said before, their growth component is less than the SPY. You see just a pure SPY, that's all growth, right? But for a zero DTE option fund, we're one of the only ones that take growth plus income and kind of have a balanced approach. So my main question is, if we go weekly, does that alienate some of the growth minded investors that are kind of thinking more long term versus the ones that actually need the income today? So the debate is, do we make T-Spy weekly, or once we prove the model of T-Spy, do we create a different product that has weekly and higher distributions but uses the same trading strategy? So that's our debate right now, and I'm all ears on input on what people think about that.
Nice. How about one that doesn't have any distributions?
That too. So it would be a product suite, T-Spy in the middle, T-Grow on the left, where it has very low distribution. You just distribute what you have to, and then T-Income on the right that has a higher distribution than we are now. It takes all the growth and packages it and delivers as income. That suite would cover sort of all three parts of the market that we've seen, but I'm really curious to hear what your viewers think about that.
How about taxes or return of capital? I noticed
Yeah,
that you don't say it's all return of capital. You kind of split it up fairly.
we
Is
try. It's
to the
so
best of your
return of capital.
knowledge.
It's hard. It's tax is hard, and here's why. Um, when you do a distribution, you can kind of guess, hey, this will probably be the bucket that it comes from. The hard part is none of us have a crystal ball for what happens between that date and the rest of the year. And so let's say the market goes against you in a certain way at the end of the year. There's a rule, 19(1)(b), that says we're as ETFs are only allowed to do long-term capital gain distributions to investors 2.5 times a year, something obscure like that. So if we miscategorize it and we have to do a third long-term capital gain distribution, we're in violation of 40 Act SEC policy. So that's what makes it really hard because we can't predict it. So we've got to be conservative on how we estimate those buckets to be. That's where return of capital is the most flexible because you're like, okay, there's no tax implication for that. And then we'll true up before the end of the year, or maybe twice a year. So that's the reason that people do return of capital, maybe differently reflected than what it actually turns out to be at the end of the year. And I just learned about this in getting into the ETF business. So that's why it's really hard to estimate correctly because of those limitations of 40 Act products.
On that subject matter, if it's when we talk about taxes,
Mm-hmm.
is it better to have something like this in one of those products in a taxable account compared to a non-taxable account in your suite that you're looking at? I can
Yeah, I mean,
see some of it being better one way or the other.
when you think about income, income in any form is always better in a tax protected account like an IRA. But here's what's good. We tried to build, and again, you've got to check with your own tax professional on this, but we tried to tax optimize the two big components of the fund. Component one is the income from option premiums, and component two is the capital growth. So with the options piece, we use 1256 contracts, and that can be potentially 60% long-term, 40% short term. That's awesome for short-term income to be able to be categorized that way. The big interesting thing is the capital growth piece. And this is complicated. And again, check with your tax attorneys, but we try to keep, 80+% of the capital growth in the SPY shares in the fund. With doing a covered call strategy, there's this, and cut this out if this is boring for you viewers, but it's really important to me because it made a huge difference for when I was doing this as an individual investor versus in an ETF. When you do a straddle, basically a covered call is a hedge position on an underlying equity, the IRS pauses the capital gains clock on the underlying shares. So if you buy SPY and you do 0 DT every day, even if you do it for more than a year, those shares, if you sell them, will be considered short-term capital gains, even though you held it for more than a year. Except if you do it in an ETF like T-Spy that actually holds the shares, potentially, and again, check with your tax attorney, when you do this every day and the fund never sells those shares, when somebody trades their shares in, so sells a share of T-Spy, the fund hands those shares back to the bank in kind. So there's no tax realization event. Therefore, that short-term categorization of the SPY growth goes away, and all that investors in ETFs that hold this have to pay is deferred long-term capital gains. And in that way, it's a lot safer to do in regular brokerage accounts because you're tax advantaged potentially due to the nature of ETFs and having the ability to do in-kind redemptions.
Okay.
And that's a powerful, powerful tax benefit potentially.
Any end of year special surprises that maybe you might hint to, like with a wink? Two winks if we make it a special distribution at the end of the year.
We're sticking with our schedule, and our goal is the other thing that we've heard from viewers and people in the market is consistency is important, and so we're really working hard to be consistent in how we distribute. And so we're telegraphing what we're doing. We want to stay within that range, and we want to do so in a way that's been the same that we've done October, November, as well as December. So we're trying to stay focused.
Consistency is important because you take your SPY eye, it's always within decimal points of that 12%.
Yeah.
Right. And you take some of the other funds and we've seen them range up into the 30s, down into the teens, settle out in the 20s. So how do you adjust? I mean, everybody can adjust over time, but it makes it more difficult.
Yeah,
It,
100%. And
now
that's one of the
this
key challenges because you got to take what the market gives you, but we can also find a way to create consistency with the distributions because that's something we actually have a little bit of control over, whereas the market we don't. So those are the two differences, and you'll see that. And make sure for your viewers you're watching total returns because our goal is to stay S&P, and maybe we can beat it a bit. Knock on wood, we have so far, and then keeping our distributions consistent too. But that cash has to come from somewhere, and it really depends on what the market gives us. So keep your eyes peeled. But it's been a great start so far.
any thought about changing your underlying of SPY,
Oh, like Taboo or something else?
IVV, just for the lower cost?
We thought about it, and it's a great question. And the difference is, 7 bips savings. And the reason that I'm hesitant is because of liquidity. So the liquidity that you get with SPY is unparalleled and unmatched compared to everybody else. And as we continue to scale, I want to make sure that that liquidity is there to sort of limit risk for our investors. So we're kind of sticking with SPY for now. But as time goes on, I'm an engineer, right? So I always like incrementally improve over time. Let's get this thing proven, and then we can figure out how to optimize as we move forward.
And that's a great segue. SPY I actually holds all the stocks.
Mm-hmm.
And they did that once they got enough money.
Mm-hmm.
So it might be something you'd be interested in that, hey, maybe we hold all the underlyings.
Yeah,
But they
and it
but
makes it
they don't do it on the Russell. Just
interesting.
that's because it's 2000.
Yeah, it's a lot of transactions to do versus.
That's right. So they actually hold uh BlackRock,
Uh-huh.
right? It for the Russell.
And that makes sense, I think, too, in the future when we scale enough, maybe we can look at actually owning the basket of stocks. The challenges that come with that just become rebalancing to make sure there's no tracking error. But then it's really interesting, and I'll learn more over time. But there's ideas of tax loss harvesting and all these optimizations that I would see as sort of a tier two. Once we prove the big broad brush stuff of what we're doing, then we can start to fine tune over time.
Yeah, and that's what SPY actually excels at
Mm,
is
yeah,
it's
Neos is really good with that.
tax loss harvesting, and they just do a good job at it, for
Yeah,
a taxable account.
yeah, they're really good,
SPY.
great at that.
All right. Well, I'm still going to push you for the first of the year. I'm going to be looking for that TDAC coming out.
All right. Well, keep the assets coming in, and once that model's proved, TDAC will be close on the heels.
So that's an interesting. It's just diversification for myself.
Yeah.
I really think that you should have a zero DTE, be it yours or one of the others. Right.
Hmm.
I'm going to stay neutral, but that
Yep.
really needs to be in somebody's account if they're doing this type of you know income investing. Is some type of zero DTE fund.
It's been fun to watch the category and comparing it to sort of some of the legacy funds that are there. And you just see it's almost like this is the next generation of what those legacy funds were doing. And we'll hopefully continue to see growth in the space. But man, it's been a blessing to be a part of it. I'm having the time of my life. And I really enjoy talking to folks like you that are helping educate people and that
That's right.
understand the
And
underpinnings.
it's interesting you say that because I follow the Income Factory,
Mm.
Stephen, and his most of his cover calls, because I'm a part of his group, are in closed end funds.
Oh, interesting.
But I just noticed the other day that he's got two ETFs.
Aha.
So he's breaking into the newer type of products that are out there.
It's growing. It's growing for a lot of really great reasons. But the biggest overarching idea is democratizing access, and I love that about the market. So it's going to be fun to watch over the next couple of years.
Any market predictions? Totally not
Oh,
financial advice.
yeah, it's hard to say. I think for me, with a long-term buy and hold view, I've always been time in the market versus time in the market, and I'm really glad that I am because, since we started, there's been some dips, there's been tons of volatility, but you kind of look at it, it's been up and to the right, and it's been able to generate income. So for what we're trying to do here, um, the volatility actually helps because premiums are tied to that. So far so good, and we'll see what happens next year. The big administration change has been interesting. Policy changes. Everyone's talking about the Trump trade. What's great about being part of buying the American economy with the SPY is you get to participate in the biggest upside. One thing I'd heard actually yesterday that was fascinating was the policy pieces. People are looking for sector advantage. And the one sector that has been benefiting most from the Trump trade has been finance and fintechs. And the reason is tariffs don't touch it, and deregulation and tax benefits do. And so they're one of the unscathed ones that you'll see if you check out the sector has been growing since the election. So that's been an interesting one and one that I would recommend following.
I do a review of the sectors on my Sunday sweet teas.
I love the sweet tea.
Do you watch those?
I just hear you talk about sweet tea, and I'm like, that's very not West Coast where I am, but I love the influence.
Yeah, I mean it's one of those. I was given personal information. Now it's more of the market information and
Hmm.
my life going forward. Right? Yeah, because I just entered retirement. I'm 3 months
Yeah,
into it. I'm still trying to figure out the weeds. Right? I mean, it's I have a call tomorrow with a gentleman. He's younger and he's retired or works on his own, does his own thing like you do, right? And how do you health insurance
yeah,
and everything else? So more than just money.
yeah.
A lot of people we can figure out the money. It's the other parts of life. What do you do with yourself? I mean, you
It's
reinvented
really
yourself, right? Into a new CEO, or you came from a
yeah.
CEO type of position, so you know how to run a business.
But it's a new industry with brand new inputs, brand new cast of characters. And I think that's actually the most energizing thing. You take a lens from somewhere else and apply it to something new. And this has been like the most fun I've had in my career. But to your point, I love that you're doing the hard work for yourself. You're kind of feeling like you're the first one through the wall, but you're taking that knowledge and you're helping others come through the wall in an easier way. And that idea is really powerful because you're kind of paying it forward. You went through something that was hard and you're trying to make it easier for others. And it's the same idea that we're trying to build here at Tap Alpha. So I love that you're doing what you're doing, and it's fun to watch your subscribers and your usership grow. It's great.
Hey, it's been a pleasure. We'll do this again first of the year after you get. We'll do this at your 6 month. When I see your 6 month performance come out, we'll do it again, and hopefully then you can fall into the top 500, you know, S&P 500s. Because
Fingers crossed.
I gotta have the 6 months worth of data.
Yep.
All right.
We're getting there, but appreciate all the support in the meantime and love the conversation. So looking forward to the next one, Brad. Thank you so much.